You see people on social media driving fancy cars, posting wads of money, and people on YouTube trying to teach you how to make unbelievable amounts of money from the stock market. You've probably wondered how people have become so successful from stocks, and if it is really worth a try. Before we get started, you can rest assured that I am not here to sell you any course whatsoever. I've spent years researching the stock market, making mistakes that cost me thousands of dollars, and I'm prepared to take everything I've learned and summarize it for you in this video. Whether you're a beginner or just looking to refresh your knowledge, this guide will cover everything you need to know to get started in the stock market. Let's begin. First, we have to understand what exactly are stocks. Stock trading involves buying and selling shares of publicly traded companies to generate profit. While other types of investing, like real estate or mutual funds, often require more hands-off approaches, stock trading allows for more direct and active management of your investments. Stock exchanges, like the New York Stock Exchange, are marketplaces where stocks are bought and sold. Brokers act as a middleman between you and the stock exchange, facilitating your trades and providing access to the market. People trade stocks for several reasons, including portfolio diversification, which spreads risk across multiple investments. Another reason is the potential for profit, as successful trades can lead to significant gains. Most investors typically give money in hopes of receiving a larger portion in return. Additionally, owning stocks grants you a stake in the company's future, giving you the opportunity to benefit from its success or the risk of losing money from its downfall. Make sure you have a pencil and pad ready for all the information I am about to teach you. Also, feel free to pause the video if I'm going too fast. Now there are two primary types of stocks: common stocks and preferred stocks. Common stocks give you voting rights and potential dividends, while preferred stocks offer fixed dividends and priority in asset distribution during liquidation. Additionally, stocks can be categorized into growth stocks, which have high potential for future gains, value stocks, which are undervalued and offer long-term stability, and dividend stocks, which pay regular income in cash. How does the stock market work? Stock prices are determined by the forces of supply and demand. When more people want to buy a stock, its price increases, and vice versa. News and events like earnings reports, economic data, and geopolitical developments can also impact stock prices. For example, you just heard about a small company that is preparing to release a life-changing product. Most investors will react by investing in this company, so that over time they can earn profit according to its long-time growth. The more money the company makes, and the more people that invest in the company, the higher the share price raises, and the more money you will make as a shareholder. Let's cover a few important terms you'll likely hear often. Bid-ask spread, the difference between the highest price a buyer is willing to pay and the lowest price a seller is willing to accept. Volume, the number of shares traded within a specific period. Market order, an order to buy or sell a stock at the current market to price. Limit order, an order to buy or sell a stock at a specified price or better. Dividend, a portion of the company's profits that are distributed to its shareholders, usually in the form of cash payments or additional shares. You should also understand financial ratios like the P/E ratio, which compares a company's stock price to its earnings per share, or EPS. This helps assess whether a stock is overvalued or undervalued. Now let's get into how you're going to invest. Choosing the right brokerage is crucial for your trading experience. Look for platforms with low fees, user-friendly interfaces, and a variety of investment options. It's also helpful to choose a brokerage that offers educational resources to help you improve your trading skills. There are plenty of options that are available on your local App Store or Google Play Store, such as Robinhood, Fidelity, and my personal favorite, which is Webull. I personally find Webull to be very simple, and it has plenty of educational content that will help you as you go. I've made it really easy for you to get started by including the link to Webull in the description below. Anyways, now that you have the basic knowledge of what the stock market is, let's talk about the different methods or strategies that people use to make money. Different trading styles cater to various risk appetites and goals. You have Day trading, which is buying and selling stocks within a single day for quick profits. Swing trading, which involves holding stocks for a few days to weeks to capture medium-term price movements. And finally, long-term investing, which is holding stocks for years, focusing on a company's long-term growth potential. You must remember that the stock market is most profitable in the long game, so patience is key. Warren Buffett, also known as one of the greatest investors of all time, once said if you do not plan on holding a stock for 10 years, then you shouldn't even hold it for 10 minutes. Remember, risk management is key. Always set stop-loss orders and diversify your portfolio to protect your investments. You may be wondering, what exactly should you be investing in for maximum earnings? There are over 3,000 publicly traded stocks to choose from. And there are two common ways that people use to choose what stocks to buy and when. To analyze stocks, you can use technical analysis, which is studying charts and indicators to predict price movements, or fundamental analysis, which is examining a company's financials, industry trends, and management quality. Common indicators include moving averages, RSI, and MACD for technical analysis, and metrics like earnings, revenue, and debt levels for fundamental analysis. While stock trading offers potential rewards, there are risks involved, including market volatility and potential losses. To manage risk, set realistic expectations, diversify your investments, and stay informed about market trends. Remember, I highly suggest you to do your own personal research before making any big financial decisions. There are plenty of online resources and books that you can learn a lot from, but remember, you will likely learn as you go, and every successful investor has made plenty of mistakes at the start. So if you feel discouraged, just remember that it's all part of the game. I truly hope you took something away from this video, and I wish you the best of luck in your investment journey. If you're interested in more content like this, please consider subscribing and leaving a like. It's absolutely free, and you can change your mind at any time. With that being said, I'll see you guys in the next video.